In this video, I'd like to talk about a stock I bought recently, and I think this is one of the most compelling investment opportunity at the moment. The company is called Gravity. This is listed in the Nasdaq Stock Exchange, and this is a company from Korea. My name is Christophe Nour, and I'm a stock picker. I invest in stocks, and I've been investing in stocks for almost a decade with a performance of 24% per year. So I've reached this performance by looking at undervalued opportunities, and I think Gravity fits these exact criteria. I think Gravity, if you look at it, if you do your own due diligence and you buy it right now, I think it will generate some healthy returns for the long term. So here is my stock pitch for you, but just so you know, I'm biased because I bought it recently. Okay, now this is Gravity stock price. This is the market cap actually of Gravity compared to the cash and cash equivalent. What I want to share with you with this first chart is that the cash pile is huge. Yes, this is a company in Korea. In Korea, before we go deeper, the balance sheets are very safe. They don't take debt. They just pile up more cash and more cash and more cash. So what you see in blue with this first chart is that the cash pile has been growing. And now we are talking about 360 million of cash. And if you compare it with the market cap in orange, now the stock has decreased, the market cap has decreased. The market cap is 400 million. So you have $410 million of market cap with cash of more than 360 million. So 90% of the market cap is in cash. So literally you almost get the company for free. And I didn't tell you what the company is about yet, but you can get a company for free. And this is not the first time this situation occurs. So we have the green arrow. This is right now, October 2024, with a large amount of cash compared to the market cap. But you see the second arrow, this one in 2022, this situation happens. And just after this, the stock went up. We have another situation, a lot of cash. The stock went up in 2019. And then in 2018, we have the same thing. A lot of cash compared to the market cap, the stock went up. And same thing here, the stock went with a lot of cash just before the stock went up. So where is the catch, you will tell me. So this is a growing company. I'm showing you here the revenue per share of the company for the past 10 years. So since 2014, what you can see in this graph is the revenue is growing. The revenue is growing up and to the right. Yes, this is cyclical. Yes, it's not a smooth line, but it went from 4 to 57. So a lot of growth. This company is growing. Where is the catch? This is not a value trap. This is not a falling knife. The company is growing its revenue. This is the earnings per share over the past 10 years going up. So this is cyclical, but still up and to the right. And this is the free cash flow per share. Okay, so this is not updated. There is less volatility here, but I think the most recent free cash flow per share will decrease. What you see now for the free cash flow is on the annual basis because this is a microcap in Korea, so they don't share the free cash flow on a quarterly basis. So I think you have a correlation with EPS, so you can expect the orange line to fluctuate like the blue line, so up and to the right. So yeah, let me go back to this situation. What you will say to me is that in 2014, if you look closely at the left of this chart, is that before, in the past, like 10 years ago, the blue was above the orange. In other words, they had more cash than their market cap. And this lasted for a while. I mean, for 2 years, 3 years, they had more cash than their market cap. So you would tell me, Chris, you're stupid or what? This is a Korean company. This is some conservative balance sheet. Maybe the situation you're telling about us today, it's normal and it will last for years. So the company will not rebound. But I will tell you this. We have this situation of safety, security, conservative management because in the past, the company was unprofitable. In 2014, 15, 16, you have in purple, the net profit margin. And you see that in the past, the company was unprofitable, negative margins. And then it improved in 2016, 17, and now we are talking about net profit margin of 15%, 20%. Okay, that's decent. But I think this is a major shift. The investors were not willing to buy into these stocks and were pessimistic with a lot of cash, and nobody believed in the company because it was unprofitable. But now they have shown for 6 years in a row that they can be sustainably profitable, and this changes a lot. This is the return on capital employed and the return on equity. In the past, you see some negative moves. Yeah, the company was not making any money. And now you have some good return on investments of 20%, 30%. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of this video. So yeah, what do they do? Now I will talk about the company. This is a Korean company, a small company in Korea that develops and publishes online video games. They have one big title which is called Ragnarok Online, and this is an MMORPG, so massively multiplayer gamer. You have one character. It can be a warrior, a sorcerer, this kind of medieval games, and you interact with a lot of players, a massively multiplayer game. And this big flagship name was released in 2002. Most players are in Asia, so Thailand, the Philippines, Korea, Japan, China. Most players are in Asia. This is what they do. That's pretty simple. This is not rocket science. That is just online games, mobile games in Korea, in Japan, in China, etc. Okay, that's the revenue breakdown by regions in case you are interested. So 20% of the revenue come from Taiwan, 20% Thailand, Philippines 15%, so quite diversified. The USA is only 3%, Japan is only 3%, Hong Kong 3%. So in various countries in Asia. And this is literally the characters. So this is the environment you evolve when you play these games. You have small characters, and this is pretty cartoon environment. This is the gameplay, so you can have a view from the sky, but also you have the third view person when you manage your own character. You move your own character. This is the mobile version of the game. And based on the Ragnarok game, the flagship title released in 2002, they have released other games. This is not these are not MMORPGs, so not massively multiplayer games, but sometimes board games or quick mobile games. So out of the main license, they created many games. Okay. Now let's go back to this situation of being unprofitable in 2016. What changed? What changed that before they were unprofitable and now they are profitable? What changed? This is exactly my next slide. What changed in 2017? The thing that changed in 2017 is pretty simple. They went from doing games for PC to mobiles. So they launched successful mobile games across different countries. Okay, let me get my face up there. Okay, so you see the revenue breakdown. In 2016, most of the revenue in blue was coming from PC, and now they worked with a Chinese studio in 2016 to create new games. In 2017, they started to launch new mobile games and worked with the Chinese studio, so half of the revenue went from mobile. And in 2018, most of the revenue come from mobile. So they started to launch new games, and mobile games are more profitable than PC games. So you see some strong profitability since 2017. And now this has not changed. This is the revenue breakdown by platform. You see 80 to 90% of the revenue come from mobile. So they changed their business plan, and now it generates a lot of money, and they stay with this business model. Okay, let's continue. How do they make money? I don't know where to put my face. Let's put here. How do they make money? Either subscription fees, so every month you pay to access their games, mostly PC games, but most of the revenues come from microtransactions. So games are free to play. Mobile games are free to play. You can download them. I tried them. I played a couple of hours. That was completely free. But if you want to buy a new item, a new spell, a new hat because you are a sorcerer and you want to fire a new fireball and have some good equipment, good color, you pay the skin. This is an in-game currency, and you pay. This is a commission for this one. So most of the revenue comes from the transactions in-game, and 30%, approximately subscription fees. That can change year over year. Maybe it's 80-20, 90%, 10%, 50-50. Some years it changes a lot because of new games, new mobile games. Okay. And this is a company that is growing. You see the acceleration of revenue since 2017. Since they implemented new mobile games, you see growth picked up and is going up and up and up. Same thing for the earnings per share. Before, it was negative, loss-making company. So they lost a lot of money, and then they became a mobile game company, and they became profitable. And I'm thinking of the catalysts. What can move the stock price in the future? Well, literally, they can continue to launch new games or mobile games. Literally, they have done this for the past 6 years. It has worked. They could continue to do it. The Asian market is a very powerful market with a lot of gamers. I know this. I've been playing games since I was 8 years old, so I know the video game industry really well. New game releases, if they are big hits with a lot of new customers, a lot of new players, a lot of new microtransactions, can generate a lot of profitability. And the pipeline of game is quite big. So they have, this is the table they share to have the major upcoming launches for the future year, so end of 2024 and beginning of 2025. Okay. The next catalyst for the stock is the expansion into new markets. They can go to Latin America, they can go deeper into the US, they can go deeper into another Asian country that is an untapped potential, so they can create new markets. This is exactly what they did for Thailand in 2020. They launched this new market. It was a big hit, so they can recreate this big hit, this big revenue lever, revenue growth, because they can enter new markets and they can be acquired. This is a small company. Maybe they need the scale, maybe they need the infrastructure of a bigger gaming company. So in case they are bought by a bigger studio, the stock price will go up. So this is definitely a catalyst. And in the same situation of small company with the small games, here are recent acquisitions of similar companies. Rovio, the publisher of Angry Birds, was acquired by the Japanese Sega in 2023. Glue Mobile was acquired by Electronic Arts in 2021. Zynga was acquired by Take-Two in 2022. These are studios that are maybe saturated in their markets. When you partner up with a big studio, you have the scale, you have the technologies, and this is literally how you can grow, scale your operations, get more clients, get more players around the world, because you have these distribution networks. So that could be something. My guess is it will not happen, but that can happen. That's definitely a catalyst. In my opinion, what will happen is no acquisition, and my guess is new game releases, expansion into new markets. So the first 2 points are the main ones. What about the risks? You have the dependence on a key title. If the new Ragnarok games are failures, the company will collapse. They depend on one key title. Also, mobile games are hit driven. So the frequency of games you have to release for mobile games is much more important compared to PC games. PC games, this is much more long term. For mobile games, I mean, you have to renew, invent new games every year, every 2 years, a couple of times per year. So you need more investments. And if you release 3 games in a row that are completely trash, it will completely collapse. The number of players will completely collapse, and the revenue will completely collapse. So if they fail many times in a row, the company will collapse completely. It will fail. So mobile games are definitely hit driven. They have to succeed. Also, competition. You are maybe familiar with Tencent, that they do a lot of games, but the gaming industry is very competitive. We all fight for eyeballs. So yeah, competition is a big hit, but Ragnarok has been doing this since 2002, so they know what they are talking about when they have been in the gaming industry for decades. And also regarding capital allocation, what I want to talk about for the risk is that they have a lot of cash and they do nothing with the cash. If it was a US company, I suspect they would have done buybacks or gave dividends, and this is not what they are doing. They give zero dividends and they do zero buybacks. Just the cash is piling up on the balance sheet and it's useless. So poor capital allocation based on investment perspective. Yes, this is safe, but I mean, this is a lack of opportunity. I'm always comparing these stocks with my different opportunity cost, different alternatives. Literally, this is a huge opportunity cost and definitely a risk because they are bad capital allocator. They don't have the financial leverage mindset. Maybe this will cause a drop in the stock price on the long term. That's definitely a risk, and management can fail at allocating capital. And also, no shareholder power. You may ask why. Let me go to the next slide. Here is the ownership of the company. Gung-Ho Online Entertainment owns 60% of Gravity. In other words, you, the small minority retail investor, you have no power. Okay, what is Gung-Ho Online Entertainment? This is a gaming holding in Japan. The founder is the CEO of SoftBank's founder, Masayoshi Son. So he has a brother, and his brother is the founder of Gung-Ho Online. And they have been investors owning 60% of the company since 2010, like more than a decade ago, like for 15 years. And this has not changed. And they have not done any pressure to do buybacks, dividends. So my guess is capital allocation will not change in the future. Ownership is so important. As a minority shareholder, you have no power. And now I want to talk about valuation. Because if you look at the PE ratio for the stock, you've seen growing revenue, growing earnings. What about valuation? We have a PE ratio of 5 approximately, and this is one of the lowest valuation ever. You see some hype on the stock price. The PE ratio has not always been 5. It has been 25 in 2020, 2021. So some hype here with new games. But now we are at the lowest point, maybe ever. So PE of 4, PE of 5, PE of 6, definitely cheap. So why invest in Gravity? That's my stock pitch and my latest investment. I think it's a decent company. I mean, mobile games, they don't have much moat. They have a decent moat, new games, a good customer base. That's a decent company with good margins, after all, with a proven business model. They have been doing this for decades, and especially they have been doing the mobile games since 2017-18. So let's say 6 years or 7 years. It's not a big hit, and then they went back into unprofitable territories. They discovered online games, launched profitable games, and now they are sustainably profitable. So this is a proven business model, and we are in an asymmetric situation because the stock price is $60 right now, and the downside is limited because they have $52 of cash per share compared to the stock price of $60. So literally you have a psychological threshold, and I think that this threshold will be solid, be strong, because I'm telling you now the company is sustainably profitable. So you have a company for free, almost for free, and you have downside limited with a lot of cash and potential upside with new games and new markets. They can continue to grow in the future, and if they launch successful games, they will continue to grow double digits. It was my stock pitch, so let me tell you in the comment section below if you have any questions. Tell me where I am wrong, tell me where I can fail, so we can have a quick chat about it. If you like this content, I have an investing coaching program to make you a better investor. In this coaching program, you will learn a complete investing process. You will learn how to find stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. So what comes with the coaching program? You will get access to an exclusive community of like-minded investors, and you will get my personal guidance to help you build the portfolio of your dream so that you can have long-term results with your stock portfolio. Click the first link in the description to get more information. You will get a 10-minute video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.